Hi everyone, what's up? It's your favorite mentor, your one and only forex hero. I go by the name of Ofentse Ledwaba, and in today's video, I'll be showing you guys just about how to enter your trade. But without wasting much time, you know what to do. Please become part of the family. Please click the like, click the subscribe, and notification bell so that you get notified every time we drop a new video. So in this today's video, you'll be able to understand the pros and cons of understanding how you can enter your trades, and I'll be showing you just about how we managed to enter some of our trades. All you need to do in forex trading, you need to understand the basics before you can be able to trade. You go after the knowledge first, the money will follow you. Everything else will make sense once you go after the knowledge. So make sure that you click that like and also catch me in the next video. Let's go. I'm on my favorite part of this video. As you know, I like analyzing and I like giving and sharing much more knowledge that I have with you guys at no cost. So all you got to do, if you like to use the broker that I'm using, click the link below and make sure that you are part of using one of the most trusted brokers. So we are looking at Dow Jones. Some people know it as US 30. So I want to show you guys something that is very much significant that you'll be able to enter trades with ease without worrying about whether it will hit your stop loss or whether you're doing something right. Eventually, yes, some trades will hit your stop loss because remember, we are not God, we are not the market makers, we cannot move price where it wants to move. Excuse me. So looking at this trend line that I drew is basically an indication to show you guys that the market came, touched this point and touched this point. So, and this is on daily time frame. So looking at what currently happened, I want to urge you to understand the movements. Always make sure you draw the structure, you understand the market where it moves. So looking at what we are currently seeing now, I can see that we had a move that subsequently showed us that we are ready to push to the upside. But where we are currently, for us to say we are pushing to the downside, we have to break this channel and go and retest before we push to the downside. But also there's a chance that the market can do something like this, can impulsively and go oops, to the upside. So looking at what currently I'm looking at now, something like this. So we can at most see what currently happens in the market, and also I urge you guys to make sure that you always get your proper analysis from higher time frame structure. That way you'll be able to understand and make use of the inner pattern. So what really happened here, we can see that this is a bullish channel, but it was also a reversal pattern showing us that we have a chance of pushing to the downside, because now what we're having 1 2 3 touches. We have this touch, 1 2 3. So me looking at this, what I would do, I would place myself once it breaks here. That way it will give me much more confirmation to say, okay, fine, indeed we are pushing to the downside, but not disregarding that we have a chance of pushing further up. But if it breaks this, then I don't have any reason to keep on buying. Okay, so now I'm on 1 hour. We look at it now. We have more candles, much more confirmations. You can look at candlestick formations, so you can see that what really happens here. For me to say, okay, fine, I look at instances of selling. I have to look at my order blocks. My order blocks obviously will be this candle, but you have to say, as long as the market is below this point, we are still selling. But if it breaks this, we are looking at buying, because we would have broken this channel, and a channel which is similar to this. Can you see what happened here? We had a similar situation around this point. We had a similar situation here. And you see, so we broke and then we pushed up. So that's what we are looking at. If we the market gives us a confirmation showing us that yes, indeed, I'm ready to push where to the upside, we'll keep on going with it. So looking at instances that you get to understand how the market moves, you make sure that you draw your chart patterns and you draw your analysis in place to communicate with what the market is telling you. You don't force the market to do what you want it to do, but always make sure that whenever you take your trades with USDT, because it's very much volatile, you can go as low as 15 minutes. Because I want to show you something here. Can you see what happened here? We had a push from the bottom. You can see this one touched here, and then it pushed. You can take this one because it never went down. This, and boom, you understand? So can you see what you could have made of this? You could have made uh to your entry around this point. You see, could have took your entry. You can see that the market tends to give us patterns within a pattern. So you could have took your entry here at the break here, and then stop loss here, and then you take it all the way here. So you can see it reached your TP with ease. So you just need to make sure you train your eye is sufficient to see what the market is giving you. You have to understand that this is what is a correction, because you're not always gonna get this type of correction. Not always you're gonna get book trades, if I understand. So sometimes you get a correction, we call it a flat correction, something like this, right? And then sometimes you get to see something like this. Understand? So you have to understand that where you are in the market, what are you currently looking at and what you're anticipating to do. So understanding the movement is the most important thing, and looking at the previous move, what will actually make you a better trader. Because look at what happened here, and then we came here. So this area, you could see that we had the last bearish candle giving us a proper order block. So obviously you would have bought here, but if you are not really familiar with understanding the order blocks, you could have used your trend line and said, I'm only gonna buy when it breaks this. Let me remove this. You buy when it breaks. You see, then it reached your TP with ease. So always make sure you understand where you are in the market, and you understand the significant candlestick formation. Can you see also this one is a hammer at the bottom? So obviously you would know that, okay, fine, I'm looking at a hammer, and you know what the hammer represents. It represents the end of a movement. So it's a reversal candlestick formation. You would know that when you see a hammer, we have chances of what, of the market pushing to the opposite direction, which is here it was pushing down, and then we are looking at the market pushing to the upside, which is at the break here. You can see, and if you place your stop loss below this hammer, voila, you have a great trade running. Another one would be this one, more like a very nice falling wedge. It's a small falling wedge, and you would know that you put your buy. Sometimes it's always good to put your what, your pending orders. That way you'll be able to understand and not make mistakes, and not be entered when the market is not moving. You'll be entered when the market is ready to move impulsively. While the market is still correcting, while the market is still playing around, you won't be in that trade. So the most important thing is understanding the market structure, because one thing I can guarantee you is that once you see it with your naked eye, it will always be there. It will always represent itself. You won't be having challenges identifying your structures. You can see here we had a bearish channel, but at the end of a bearish channel, you had a strong demand level, which shows us that we came here 1, 2, 3, 4 times and then we pushed up. So it shows you that this area is very much strong. As long as the market is still above it, we buy. But if it had broken and said and did something like this, obviously we're gonna sell, because now we see that the new the new demand now, no, the old demand becomes a supply. You understand? So this becomes a supply if the price is above it, but once the price goes below it, it will now become the supply. So as much as the price is still above it, it is a demand. But if it breaks it, now it's no longer a demand, it's it's a supply. So this will become a supply if it's broken. But now it was it was a demand, then it pushed. So this is just what I wanted to share with you. I hope you took down notes and make sure you apply it. Catch me in the next video. From me, your one and only, your favorite mentor, Forex Hero. Thank you for tuning in. Peace.